Next, we have a fireside chat, and for the same, I will request Mrs. Presha P, Chief Executive Officer and the Wholetime Director of Credit Saison India, and Mr. Singh Jaini, Founder and CEO of Digital Fifth, to join us on stage. The topic they're gonna cover is Indian credit perspective, discoveries and possibilities.
So I think I remember long back when Credit Saison entered India, and actually even before that, I had met leadership from Saison, and typically you will think that typically when somebody comes from another country, they will take a lot of time to scale up and build businesses, and yeah, a lot of challenges in entering India and all of that. But if I look at it, somebody who has done it really, really well is Saison. So if you look at the business and market and top players in partnerships and building their own scale, even in branches or anywhere else, I think it's something which has not been achieved by anybody else. I guess you may be the only one. So Presha, I just want to quickly understand first at a broader level, how did you do it? So it's such a tough work to enter India and then build business and that scale. I mean, their scale is enormous, right? So quick update on that. How did you do that?
Sure. So I think, just a quick introduction, right? Our parent, Credit Saison, is one of Japan's largest credit card providers. But, about sort of 12 years, they had a sort of very clear sort of thought process with respect to building businesses outside of Japan. And the whole idea was, to start in Southeast Asia, given that Southeast Asia is sort of closer towards Japan. But they realized that, the future is India. So the whole idea was, to enter India via sort of an entity that, they would sort of fully control, fully support. But the thought process also was very clear on the sort of blueprint that we were executing, that as an MNC, if you entered India day one, right, and effectively, if you do direct lending, if you get your hands burnt, it's very difficult to sort of recover from that. So the whole sort of thought process on our business plan is to really execute sort of a phased business plan, whereby we started with sort of two verticals, which is our wholesale lending, co-lending with fintech partnerships, where we are more reliant on the partners to help us. As we started building capabilities, right, because, retail lending, you need a lot of your own capabilities, be it, underwriting, servicing, collections. The previous panel was in collections, right? So I think the ability to do that was, then we were confident that, okay, now we can do our direct lending, right? So now we lend to SMEs directly, via 40 branches. We lend to consumers mainly through partnerships in embedded finance, right? So the book has grown really well. Today we're 10,000 crores of AUM. We have a team strength of close to about 800 people, right? But I would say thoughtfulness, choosing sort of the right steps to lay the foundation. And I think once you then figure that out, ability to capitalize, right? So then you kind of have that hockey stick growth that you expect to see as well.
No, I think a lot to learn on that side, right? I think you'll be a rarity. So you think that hockey stick happens, mostly it doesn't happen, right? Hockey sticks happens normally in credit on the other side, right? So you would go down, reverse. But anyway, this is brilliant. But maybe from your perspective, because you're so clued on to the country and you have all kind of partners out there. What trends do you see right now? What is happening right now? Secured, unsecured, co-lending, what's the flavor of the day and where should people invest? Where should the growth be?
Sure. So I think a couple of parts, right? So I think the main trend definitely has been, unprecedented growth in unsecured consumer lending, right? I think, last time it used to be if you do 100 crores of monthly dispersals is a good thing. But then it was the 1,000 crores of monthly dispersal club, right?
I think once when Nishan says there, 500 crore to hona chahiye. Maine kaha, what are we talking about?
Yeah, right. So you can see the sheer scale of what consumer lending has kind of picked up. But I think the key factor on the trend on it is that this is really a consumption-led sort of increase in credit, right? If you look at the population that's borrowing, it's a younger population that is coming here. This population, if you look at it, right, 15 years ago, nobody would have borrowed in order to buy a phone or to buy a laptop. But today, that's what someone wants, right? They are actually taking a loan for a consumption reason because their cash flows can support it, right? These are people who are in good paying jobs, may not be able to sort of buy, 80,000, 1 lakh phone, but, you can make it as an EMI. So I think we've seen a very big shift in the mindset of the customer. Customer may not even want to buy a home. Like 15 years ago, I would say home loans were probably, a bigger factor. Today, renting is okay, but let's take a loan with respect to buying things, right? So I would say the biggest trend that I think, and of course, right, that you've seen is the unsecured lending. Now, I think you can't talk of unsecured lending without talking about the regulator aspect. Right, so I would say the biggest sort of trend also that's happened is that the regulator has also sort of been active, right? And I think two sort of key focus areas. One has been with respect to the digital lending guidelines. That has come into two parts. One is with effectively allowing default loss guarantee to be operationalized, which is a watershed moment for fintechs to work with NBFCs. But the second big thing that the regulator is championing is a lot about customer protection, advocating that customers know their interest rate, loan tenure, everything, right? So I think that's a key aspect. The other big circular that has come in is, of course, in order to moderate unsecured, the regulator has also increased the risk weightage for unsecured lending. So, sort of increased it to 125%. So I think with this theme, I think we're going to see a lot more trends towards secured lending. It seems like a natural sort of movement that we will see with definitely a bit more cool down on the unsecured consumer lending.
This is good. So maybe we can spend a few minutes on secured lending. How will it work? Where do you see it growing, and how do you facilitate quick disbursement processes, right? Because there is still a lot of blockages there. So maybe on secured lending, if you can delve deeper, because a lot of folks here would want to build businesses in the secured side. कैसे होगा और कैसे scale पकड़ेगा? In a very digital way rather than a physical touch.
Yeah, so I think, secured lending, maybe I'll choose one product, right? Because, of course, there's multiple products. So maybe I'll choose sort of loan against property. Now, I think if you look at loan against property also, there is various, right? There is the sort of the larger ticket size, which is maybe 50 lakhs, or those kind of a number. Now, that to digitalize is very difficult, right? Because it's very sort of, the ticket size is large. Hence, the process takes a lot of time. I think then there is that sweet spot of maybe 2025. Interestingly, though, the TAT on a 2025 lap is still 10 to 14 days. Now, there has to be optimization, right? Because cannot be that, if business loans are now down to 6 to 7, there's a lot of break in the journey that is, getting you to 10 to 14. And again, right, a lot of it is because of the kind of the due diligence you have to do, registration and everything as well. But 10 to 14 days is almost like what is very interesting is that this was the TAT maybe 10 years ago. And this is the TAT today, right? So if you talk to anyone, personal loan 10 years ago was 5 to 6 days. Today, a personal loan is 5 to 6 minutes, right? Or some people can even do it in seconds. So I think the optimizing the TAT, definitely solving the TAT, not in the large ticket lap, but I think in the mid lap will be good. I think the other lap that I'm very bullish is the micro lap, right? So I think the sub 10 lakh, the way that's grown is also quite nice. I think that, players like, say, 5-Star and all have done a fantastic job. I think growing to their AUM is about a 10,000 crore book at the moment, right? But that is really granular because building LAP at, average ticket size of 5 lakh is a lot. And I think there might be the fastest one to optimize because that while you take collateral, it's really moral suasion. Because there's quite a lot of questions. Exactly, right? So there's quite a lot of questions on the quality of the asset. So there, for example, it's a lot more cash flow based underwriting. So if it's on cash flow based underwriting, you should definitely be able to optimize the TAT, right? So bullish on microlab probably as the first one that can reduce the TAT. Maybe the second one will be a win, but I don't think the larger ticket size, I personally don't expect that to be reduced much.
Okay, so you're saying home loans will still be tough. Okay. Right now, I'm trying to take home loan. I just would have said earlier. And yes, tough. There's no process, okay? Yes. And kind of digital documents they want us to upload, it'll take 2 days for us to figure this out, what it is, right? So anyway, so I think from a stack perspective or a structure perspective, you are big in partnership. So what does it take to, what kind of culture, what kind of thought process it takes to partner? Because you are partnering on all sides. You're partnering with fintechs, you're partnering with embedded finance players, you're partnering with also banks on co-lending. So what does it take to build a culture where partnerships are logical and be it from a tech perspective, business perspective, how do you align the priorities? And you have your own branches as well, right? So how do you balance the whole thing?
Yeah. So I think the key, maybe I'll divide it, right? But I think the starting point on the partnerships is definitely, the starting point is the strength of the balance sheet, right? For example, both sides that we've seen, right? When we work with a partner and a partner wants to work with us. Now, a partner doesn't necessarily want to work with doesn't want to work with 8 to 10 lenders. They want to go deep with 4-5 lenders purely because of the work that you do with one lender, depending on size, is exactly the same, right? So I think what is common is that partners are looking for someone that can scale and have a deep balance sheet. That's a very important criteria, right? So when we've done partnerships, embedded finance, the strength of the balance sheet we bring is very important. And likewise, right, when we are partnering with banks, we're also looking at banks who can sort of take up a large volume, right? Because that's the whole idea of, say, we do co-lending model 2 with a bank. It's not about doing 40, 50 crores, but can I do 100 crores? Because the work that you do is exactly the same. I think the second and I think the biggest tenet on this whole lending is the tech of it, right? So the tech of it also, you can divide it into 2 parts. The first is if you directly integrate with your partners, right? So for example, say, we're live, say, with someone like Cred, or say now we're live with someone like Airtel. Customer experience is sacrosanct in this process. Because bear in mind, right, the customer today has options, but the reason he's engaging with your platform is purely because you're enabling that convenience. That convenience is the reason why if he can get a loan
Correct.
from a bank at 12.99, he's still willing to go to 16% because it is 3 to 4 clicks that you've optimized. But optimization of tech is not just building stack that the 2 APIs are talking together. Optimization of tech is also about the ability to build tech that is compliant. We all live in the world where, when RBI comes and audits your process, you have to make sure that in this lifetime of your tech, is your KYC compliant, right? What are the steps that you've done, right? How have you enabled this automated? Is your rule engine running, right? Is his system pinging your system to check the decision engine, right? So there's an entire process of not just working with the partner on the tech stack, but also ensuring that you're fully sort of regulatory compliant. I think there's another aspect of tech in this whole co-lending model whereby a bank might just work with a provider which effectively caters for their entire tech needs, right? So that then that provider can integrate with originators or lenders. I think that's a separate sort of problem statement also to be solved.
Okay. I think we'll use this time for maybe one question. We have time for one question. Yeah, please. Maybe anybody can pick up this thing. And yeah, there it is.
Hi, good evening. My name is Pankaj Sharma, and I head a company called Biz to Credit for India. Thank you so much for sharing wonderful insights, with regards to unsecured and secured loans, Presha. My question to you is that, you talked about reducing the TAT for products like MicroLab. And I think that is one of the biggest pain areas for all lenders, in fact, across, asset products. So I just wanted to understand your views, and if you could please share, how do you see the role of partnership ecosystems, specifically, loan aggregators and marketplaces, reducing the TAT as well as, aiding lenders like you in terms of faster distribution of credit, specifically marketplaces and loan aggregators? Thank you.
Yeah. So I think, aggregators have played a very powerful role in terms of helping, lenders like ourselves sort of scale up, right? No doubt about that. But I think one thing for sure is the routing engine that aggregators also have, right? So the biggest power of an aggregator is starting to understand if they push a loan to lender X or if they push a loan to lender Y, what's the probability of that conversion, right? Because I think that also helps because, if you send me, 100 loans and if I reject, 70, that's not a working model, right? But if you send it to, say, another lender, it fits their risk appetite, that might sort of work better, right? So I think aggregators' alignment to the risk policies of certain lenders to understand what will end up passing what, I think that's a key enabler in that sense, right? Because in the end of the aggregator would probably be incurring the CAC for that entire 100, right? So if your conversion on me is basically 30, but a conversion on someone is basically 70, there's a very big difference in terms of the profitability of that aggregator also.
Okay. I think with this, we close. We are spot on, not bad, right? I think we were just discussing that all of our efforts have been to ensure that we are spot on. So we are nearly there. I think we are off by 5 minutes max. Yeah.
Superb.
Thank you, Presha. This is
so much.
superb. Thank you.
Thank you.
Thank you, Ms. Presha. Thank you, Mr. Samir, for the insightful address.